All right, so what is going on with Alibaba stock? In this video, I'm going to cover all of the recent company updates and highlights. And we're also going to go over the technicals and a little bit of fundamentals. And then at the end of the video, I'm going to provide my price target for the stock over the long term. So let's get into it. All right, so let's start with the technicals here on Alibaba. Now, if you are a shareholder, it's been a little bit frustrating the last couple of months because you can see that we are in a little bit of a pullback. But this pullback is completely normal because we did go on a massive run here. So if you look at the stock chart here, and you can see that we actually rallied about 83% from this bottom, and it was pretty much up only. So we got, an 83% move to the upside without any meaningful pullback. But of course, now we are experiencing that pullback to that move, which is very normal. It's very healthy. And you can see that we actually kind of bounced. We kind of had a little bounce off of this level, so off of this support here. And, looks like we might be coming back down to retest it. But again, that's completely normal. We're still above the 200 here, which of course, we could eventually get a bounce off this 200. But even then, it would still be a very normal, healthy pullback. So there's really nothing to see there. But overall, the chart structure is looking very good. We are in an uptrend. We are, making our way out of the sort of depths of despair that occurred all throughout this period. So, overall, I'd say the chart is looking really good. This is a very bullish chart. Things just take time. You can't expect to get an 80% move to the upside without a meaningful pullback. So those are my thoughts on the chart. So let's get into some news here. This article actually just broke today, this morning in fact. So Chinese AI unicorns Minimax and Zhipu said to be eyeing imminent Hong Kong IPOs. So Shanghai-based Minimax, backed by keyword Alibaba and Tencent and others, plans for its IPO to take place as soon as January. Okay, so this is coming right up here. So this is very important because historically, or at least the last couple of years, things in China have been pretty slow. The economy has been slow. There has not been a lot of capital flowing within the economy because they have been in a bit of a recession. But because of these IPOs here, especially because they're AI IPOs, you can see that things are really starting to shift in China. China is aggressively trying to play catch up right now when it comes to AI. China wants to be respected on the global stage when it comes to AI. And of course, they're a little bit behind the US, or maybe a lot behind in some senses. But, overall, this is very positive for Baba because, of course, they back these companies, number one. And number two, Baba is sort of trying to position themselves as the AI leader within China. So if these IPOs really start to do well and these companies report good numbers, the market is going to be forced to have to look at them. And when that occurs, right, so if these companies actually do well and compete on the global stage, it'll sort of force a rotation, out of some of these US names, especially the overvalued ones, into some of these cheaper sort of emerging Chinese AI plays. So this is overall very bullish for Alibaba, and it kind of proves that there is a bit of a rotation that's beginning to emerge, a power rotation that's beginning to emerge, right? China is trying to play catch up right now, and that's very bullish for Alibaba because really AI hasn't been fully priced into the stock as of yet. So another very interesting piece of news that broke a couple weeks ago is that Alibaba starts selling Quark AI glasses in China, enters wearable race. So China's e-commerce giant Alibaba has started selling its Quark AI smart glasses powered by the Qwen and Quark's multimodal AI model, making its entry into the consumer wearable tech segment. So again, Alibaba is aggressively investing in AI. They want to be respected as an AI company. So with Alibaba, it's no longer about e-commerce. It is emerging as an AI leader within China, and they are aggressively investing. And again, this is very bullish because there is not a single buzzword within the investing landscape right now that demands a higher premium than AI. And Alibaba, once again, is positioning themselves as the leader within China for this very trend. Another very important or interesting chart to look at is this power generation capacity with China versus the United States. Now, you can see that over the last couple of years, China's power grid has been absolutely going vertical in terms of its overall capacity, while the US has been relatively stable. And this is very interesting because this is sort of evidence that China is taking energy and the build out of AI very, very seriously, right? So China's been expanding rapidly, whereas the US has been relatively constrained. Now, of course, in the US, you have a lot of regulations, etc., that make the build out of sort of the energy grid more difficult. But China doesn't have that problem because the CCP can have a mandate and it just kind of gets done because they can push it through if that is their agenda. Now, this is a bit of an issue for the United States because, sure, we might have a tech advantage when it comes to AI, but it's quite clear that China has the energy advantage. And going forward, this could really benefit China a lot. And it is a concern among a lot of AI bulls within the United States is, hey, we've got the tech and we're doing our best, but there still is that overall power constraint within the grid. So this chart is really evidence that China is taking AI very seriously. They're taking energy very seriously. And we do have, as I said, a technological advantage, but we do not have the energy advantage that China does. So another interesting piece of news that broke recently is that Trump is now allowing the sale of NVIDIA's H200 chips to China, asking for a 25% cut. So of course this deal benefits the United States, but it also benefits China because China, as we just said, has the energy advantage, but they do not have the tech advantage. So we're willing to give them some of our tech for a 25% cut. So, if that's fair, we'll find out. But this really is ultimately a positive catalyst for Alibaba and China more broadly. So now, of course, we have to talk about Alibaba's Q3 results. So we're looking at Alibaba's investor presentation here. So you can see that total revenue came in at 15% year-over-year growth, which is a phenomenal number because just a couple years ago, Alibaba was pretty much treading water when it came to their growth rate, right? Their core commerce, like Taobao, Tmall, was growing pretty much in the low single digits, but now it's ticked up to 15%. So Alibaba e-commerce group, so total, e-commerce revenue is actually up 16%, and cloud intelligence is up 34% year over year. Now, 34% is just a massive number, right? 34% growth is just phenomenal. All right, you could not be happier with 34% growth because, again, just a couple years ago, cloud intelligence was barely growing. It was in the mid-single digits. And now that has accelerated to 34% on strong AI demand. So if we read what they had to say here, it says, we are continuing our focus and discipline on AI plus cloud, so AI, big buzzword, and consumption. And we see strong momentum from these strategies with gains in technology, market share, and customer and user engagement. So another key word here is market share, right? They are seeing gains in their market share. And that's very important because e-commerce within China is very, very competitive. And the last couple of years, they saw a lot of pressure from JD and also PDD, especially PDD, right? PDD was taking market share from Alibaba because they compete on the lower end of the market. And because the consumer has been very sensitive in China, because the economy has been weak, consumers have opted for the lower priced option. But now that the economy is beginning to wake back up again, Alibaba is beginning to see an acceleration in their growth rate. So on consumption, our quick commerce continued to scale significantly during the quarter. And we executed our plan to grow the scale of our quick commerce business, improve user experience, and narrow UE loss. Our e-commerce business continued to deliver solid revenue growth with its customer management revenue up 10%. So our cloud business segment revenue and revenue from external customers accelerated to 34% and 29% respectively, with AI-related product revenue delivering another quarter of triple-digit growth. So when it just comes to AI, when it comes to their AI business, they are growing at a rate that is in the triple digits. Now that is phenomenal, right? That is absolutely phenomenal. So all these numbers are pretty much as good as it gets just from a top line perspective. So really, I could not be happier with these numbers, especially considering where the company was at a couple of years ago, right? Alibaba has really turned the corner when it comes to their core businesses and their overall growth rate. So when it comes to the top line, Alibaba could not be in a better position. Everything is looking very, very good from a revenue standpoint. So let's get into what is actually holding Alibaba back right now, which is poor numbers when it comes to income from operations. Now, on a quarterly basis, year over year, you can see here that income from operations is down 85%. So that's kind of that's a big number. That is not ideal. However, a big part of the reason why the decline is so steep is because they divested Sun Art, which was a holding of theirs. So of course, by divesting that asset, you're going to see a temporary decrease in income from operations as a result of that disposal. Now, of course, Alibaba is also investing a lot of money in AI right now, which is furthering the margin pressure. And that is ultimately the reason why Alibaba isn't trading at a much higher price right now. Because yes, you have the top line growth, but you do have the margin contraction as a result of AI spend and also this disposal of Sun Art. Now, of course, this is kind of a temporary problem because eventually Alibaba will see an ROI on their AI investments. And also, eventually, Sun Art is no longer going to be a part of their financials. So over time, these numbers will stabilize and eventually turn back to growth. But when it comes to the just stock price decline, the little pullback that we're seeing right now in Alibaba, a lot of that has to do with the decline in income from operations. All right, so that is a quick summary of everything that's been going on with Alibaba over the last couple of months here. So what are my price targets for Alibaba going forward? Now, I'm a long-term investor, right? I'm not a swing trader when it comes to Alibaba. I'm not a momentum trader when it comes to Alibaba, right? Alibaba is a stock that I want to hold for the next 5 to 10 years. And I believe that Alibaba is positioning themselves as a very powerful leader in these key areas, right? They are repositioning themselves as the e-commerce leader within China. They are positioning themselves as the AI leader within China, and the valuation is still very low. The valuation still does not fully reflect their initiatives that they've been delivering on the last several quarters. So I believe that there's still a long runway of growth for Alibaba. And I think that the current dip that we're in is just a temporary blip in the overall macro bull market. So over time, over the long term, I expect Alibaba to continue doing well. And I fully expect it to break above its all-time highs at some point in the future. So along the ride, I'm just going to continue to hold my shares and buy more if we see any aggressive dip. All right, guys, so thank you so much for watching my video. If you like the value that I offered in this video, hit that subscribe button. All right, guys, thank you.